How's that?
It's fucking fine.
Subject to? I have no idea.
In real estate?
Yeah.
I don't even know what that means in school, so I don't know.
I have no idea what you're talking about.
No idea.
Renting houses like with some type of I can't tell you. That sounds I've never heard of that.
Is it when like people like vandalize or don't follow with the rules, so then they get like text from Airbnb?
Oh, Airbnb arbitrage. Oh. Is that where Airbnbs are taking over?
Oh, that's when you rent out. You like own like an apartment maybe like downtown, and you rent it out to people. Like you stay there for a certain amount of time.
I have no idea. I guess I'm the blue on all this stuff. I'm catching up.
I know Airbnb arbitrage. I got nothing.
Kind of like, you know, basically using some type of like loans or something, like to get a house basically and like have the loan pay off. I don't know. I don't know the whole thing about it, but I've heard of it before.
House hacking, I guess when you guys have like a security system and people like go into your database and take all your information.
What is house hacking? It's not slumming. House hacking would be, is it the same as like when you don't leave?
House hacking. It's when you like some kind of hack. You know, bro. Come on.
I don't know.
House hacking. It's when you
got this.
house hacking.
Well, I imagine somebody trying to get into your security system on your house.
Probably, to me, that sounds like charging too much for rent.
Sound like some
1031 exchange. Well, if I know anything about exchanges, I know that's like a marketplace, so 1031 might be just some sort of marketplace that is directly tied to, let's see, 1031.
That is when at 1031 I exchange money for my weed.
1031 exchange.
Okay, that is.
That's some kind of government grant.
Something to do with taxes.
Hard money, I want to say like cash.
What is hard money? Cash.
Money that you work hard for.
Coin, so something that's actually tangible. So and it's usually, well, it's not backed by gold anymore, but yeah, it's not cryptocurrency. It's actually tangible money.
Make it hard to get? I don't know. I have no idea.
from my understanding, cash on cash is like kind of money on top of money. Basically, that's my understanding.
Double down, nothing.
What is cash on cash? Is that like prostitution?
Cash on cash. I feel like I've heard that before, but
That's a song. You can thought that, man.
Oh, guys, that's when people talk about monetizing. When they try to take money out of something, if I'm not mistaken. So I think it's when they try to monetize something that really doesn't have value.
That sounds stupid.
Yeah.
I don't know what that means.
Cap rate, you're set at like a certain minimum and you can't go above that rate.
A cap rate is where they cap off the amount of money they can charge you.
Cap rate. So that's like when, I believe that's when you're like financing a house. It's the highest the rate could be.
Is that like the final? Would you say like it tops it off kind of thing? That's all I got. That's all I got.
Welcome everybody. This is James Brown. I'm your host of This Month in Real Estate Investing. This is our first episode and might be a little shaky as we get off the ground here, but we'll get through it, and I'm super excited. So what we're gonna do, kind of the background on this show, we're gonna have a panel of guests, myself and 3 guests that are real estate investors. And we're going to go through some of the top news stories for this month. And so I'm going to kind of read off a couple of the ones we're going to talk about today. One is how climate change could affect the future of real estate investing. There's a lot of factors that go into that. Then, real estate investing app Finto raised $6.2 million at an $80 million valuation. And we'll get into what that app is and how that could be changing real estate investing. And then the next one is how much you would have made or lost investing in real estate at the height of the market in 2007, which has bearing on where we're going now. So with that, let's jump into it. All right, we're back. So I wanted to introduce our first guests, starting off with David Randolph III. He's a very experienced investor. And I'm just going to let everybody introduce themselves after I can name everybody. Then we've got David and Katie Hughes and Tim Winfrey Jr. So do you guys want to just jump in? David Randolph, just give a short bio.
What, 5 minutes or less, or 1 minute or less?
We've got 2 hours, but we got a lot to cover. Okay. So yeah, let's keep it under 5.
I guess what I'll do is I'll just give you remember when we used to have those things called REIA meetings, before the pandemic, we would go and network at real life locations. I guess I'll give my 90-second networking thing in the group that we would do when we're shaking hands and introducing. So, hi, my name's David Randolph. I rehab about 5 to 10 houses a year. All my renovated houses have sold in 7 days or less, at list price or higher, for 12 years. So they're drop dead gorgeous houses. I make $50,000 to $150,000 profit on each house. Now, these are just houses, $250,000 houses here in St. Louis, Missouri. And so I do this, though, by negotiating short sales. So my method of buying is short sales. And so this is not on the MLS with a realtor, but rather as an investor entrepreneur, I work with the homeowner and negotiate with the bank to get a really low price on the house. I've actually been blessed to have over $3 million in cash in my retirement accounts from real estate. And so I'm also a hard money lender. Okay. And we can define that if those people really mess that up, the hard money lender intro you just played. But I'm a hard money lender, and my heart and passion is to help new rehabbers get started. So I lend them all the money to buy the house, all the money to fix the house up, all the money for the points on the loan, and all the money for the monthly interest payments. Because I want new rehabbers to get started. There's no tax returns, no credit check. I also now teach short sales to other people. People go like, wow, like, Mary's, she's shaking her head, wow, yeah, that's exciting. And so now people have come to me about 3 years ago and said, teach me how to do short sales. So now I am a short sale educator and coach, and I love it. To be honest with you, I'm actually cutting my rehabs down from 10 a year to 5 a year because I love teaching people short sales. Some of my best students, we just closed 4 deals in the past 2.5 months. Each one was over $100,000 profit on their very first short sale. So the banks are dumping the houses right now. So that's my, longer version, I guess, of the intro with it. But I'm a real estate investor who's been doing it for 12 years, enjoying it very much.
Awesome. Thanks. David and Katie, you guys want to jump in?
Sure. Well, first off, thanks for having us here on your show.
Much.
It's an honor to be here and share anything we can of value to help the listeners. So we appreciate you all putting this on and having us. And so this is my beautiful, amazing bride, Katie Marie. We've been married 7 years. We have a 16-month-old Gabriel the Great, we call him. And we live in Sarasota, Florida. We actually went down there on vacation, never left, literally 5 years ago. And the reason I say that is because of real estate, right? Where we have complete flexibility, freedom, and mobility, right? To not be tied down geographically or in those things. So real estate has been such a big passion of ours because it's been the vehicle to give us the freedom and the dream life and lifestyle, not only for ourselves, but freed us up to really help others maximally. Like David was talking about. I loved what you said, man. I was already taking notes, David, on what you were sharing, man. We're going to have to connect offline for sure and collaborate on things and all of you guys. But so yeah, the nutshell story for us is before we got married, before we met years ago, I just decided I wanted to live on the other side of money. I had seen the pain of limitations financially. My dad battled depression through the years and not working. And so I grew up with amazing parents, amazing family, but in the area of finances, it was a lot of stress, strain, struggle, and lack around money. And so I remember just making a decision. I didn't know how. I didn't know it was going to be real estate. I just remember making a decision that I wanted to live on the other side of money, where I wasn't working for money, trading time for money, but money was working for me. I had no idea how that was going to be the case. So all of you listeners, just know you don't need to know how. We're here to help you, of course, talking about real estate, but that can be the vehicle for you, just like it's been for us and so many other people. But that's the key, is make a decision. Everything else from there, I can reflect back our life, the businesses that we own now, the real estate, the way we're able to impact more people than ever before, and all of that is a direct result of that decision. And so for me, because of that decision, it led me to the rest of the decisions, right? The decision to get a mentor who had the results, the life, the knowledge, the fruit in their own life, financial freedom that I wanted. And so real estate happened to be that vehicle. And so just chose to be a sponge and learn from, my mentor and others that had the results, the knowledge, the know-how, and just do what they told me to do, right? In the proven process. And so for us, what that's looked like in the realm of real estate has been mostly, we've flipped some properties along the way, but we've mostly been buy and hold residential real estate. So a lot of single family houses on annual rentals. We also have Airbnbs as well. Right now we're getting into apartments as well. So that's our focus. And we're just passionate about, real estate because it's not only given us the freedom, but it's allowed us to help other people plug into it. And anything else you want to say?
And
Betty?
We're also doing some hard money lending as well.
Yeah, we just started that as well.
Just started that a few months ago. And so we have a company called Simplified Investing. We do private group coaching for first-time real estate investors all the way up to extremely successful, seasoned investors. And we have a weekly panel. So we have 4 other panelists and us that are accessible to our students every single day of the week, business days. And we just love what we do. We're super passionate to help people utilize the vehicle of real estate to step into absolute financial overflow so that they can really pursue the dreams and passions that are on their hearts.
Fantastic. You guys are doing all sorts of stuff. That's great. All right, Tim Winfrey, you're up, buddy.
Awesome. So first of all, thank you guys for having me. I'm absolutely stoked to be here. I'll try to keep this brief. I'm second generation, so my old man's been selling houses since 1984. I'm a broker as well as an investor. I own a small brokerage in the western suburbs of Chicago. Currently have 5 agents. I lean far heavier in the investing field than on the retail side. The retail is essentially a downsell because I tend to only work motivated sellers, and we do just about anything. So, I mean, over the past 11 years, we flipped over 100 properties. I've also worked for an REO broker, so I've managed repairs on an additional 50 to 100 homes for Fannie Mae and Freddie Mac and things of that nature. We practice wholesaling, creative financing, subject to, and I also have a podcast where we interview 5 absolute real estate investing rock stars every week. So we are constantly growing our knowledge base, and yeah, like I said, I'll keep it brief.
Fantastic. Yeah, I love your podcast. I've been on it and I've watched other episodes, and you get some definite rock stars on there. It's a great one.
Thank you.
Cool. Well, I'm psyched to have all you guys on here and dive into the news. The show is sponsored by Jason Palliser's 2-day blueprint and REI Content Packs. Let me say that again. REI Content Packs. So let's dive into the news. Let me pull up my doc. We got a lot. I know you guys were sent these news items ahead of time, and there was a lot to read. So I'm just going to kind of summarize. And if you guys, have any comments on what else was in the article, that's what this show is about. So the first one is how climate change could affect the future of real estate investing. That was on Benzinga. That was the source. So I know in this article, they talk about scenarios. So the Federal Emergency Management Agency conducted some simulations. One was called Phoenix, where they kind of simulated what would happen, how many deaths, missing people, homeless, economic costs. And it seems like gloom and doom, but when you really look at the reality of some of these storms that are hitting, their scenarios were pretty dead on. This last one, 2 million people in Florida were without power for a long period of time. And, storms are getting stronger and more frequent. So, and more storms like hitting at the same time, so let's see. I guess, what are your thoughts? I'll keep reading this article and come up with some other questions, but what do you guys feel like? Well, David and Katie, you're in Florida. Like, this affects you guys directly, right?
Yeah, we're actually
2 miles from the water. In Sarasota.
Yeah, we're 2 miles from the water, 3 miles from the actual Gulf of Mexico. And the eye of the storm was for Hurricane Ian was 35 miles wide, and we live just an hour from like the actual center of
where it hit.
Yeah, where it hit. And Sarasota is it's just, I don't know, it's a really special place. I believe there's only been one hurricane to hit our area, and it was back like in the 20s. And the thing is, like, there have always been hurricanes, and as Floridians, we definitely take them seriously, but we get tropical storms that pass through. We've had 40 or 50 mile an hour winds before, and I believe there were 90 mile an hour gusts. We actually were out of state at the time. But, there have been natural disasters, like, as you look throughout history. And I think things can really become sensationalized in the media. We all know that. And, it's the stories that invoke fear that sell news. And so I always really want to look from through a filter of truth versus like what the media wants to feed us. And so, global warming, now they don't call it global warming, they call it climate change, because many people are like, well, that's weird. If if the earth is actually getting warmer, it's been colder where I live than normal. You know, like right now we're up in Michigan. I'm originally from here, right on Lake Michigan. And I can tell you we've had colder summers for 7+ years, and it is cyclical. And so I feel like people, for their own reasons and agendas, a lot of times will try to force their narrative upon the public because we've been taught to trust it as a source. You know, we've been taught to trust authority. And so I just always want to take a bird's eye view, like a God's eye view of things, and see, you know, what's really going on. And, you know, when it comes to real estate, as far as I know, God made only one earth, you know, that has humans on it. And along with time, real estate is really the one of the only completely non-renewable resources. I know that sometimes, you know, people will create islands out of nothing in the ocean, but that's rare, and it takes just, you know, trillions and trillions of dollars. And so with modern technology, we're so blessed to basically turn any environment into a tropical environment, because as humans, we really only thrive within a certain temperature to a certain temperature. And so, you know, you may live in a super cold climate, or you may live in a subtropical climate like we do. We actually live in the same environment in our home. You know, we have similar humidity, we have similar temperatures, that kind of thing. And so whether people say that the earth is getting warmer or it's getting colder and the ice caps are melting or they're freezing, you know, there's a lot we can do with modern technology. And so I would steer people away from allowing fear to guide them when it comes to real estate investing, and really look at the patterns of real estate through the years, right? Like, so we've definitely had corrections and dips and dives, but overall, of course, real estate continues to climb. And it's because people need somewhere to live, right? And more people are really realizing they're catching that real estate bug and just wanting to invest in real estate. So, you know, that overall, that's just kind of my overarching take, is to really be smart about, and everything that we do is spirit-led. We're lovers of Jesus, and we teach from a kingdom perspective, and we just really help people, whether they have the same beliefs as us or not, to really look through a lens of truth and see what actually is going on around them versus what the narrative is that's being kind of preached to them.
Yeah. I just want to jump in here, and David and Tim, I'd like your perspective too, but I just want to like share a story. I had a friend looking to invest, and I introduced him to a multifamily deal in Florida, and sent his 40 grand money, wired it, and then Hurricane Michael hit and wiped out Panama City and the property that they were buying. I was like, oh my God, what have I gotten my buddy into? But it turned out okay. The operators, which with multifamily, your operator, whoever's putting the deals together and you know, taking care of the property through the lifetime of that deal is super important. Luckily, they had crews come in from out of state, quickly fixed the missing walls and roof, and like it really messed up that property. And they got it up and going. Because they were one of the first to get it back online, they were able to increase rents, and not gouging people, but it was just the reality of what they were doing. And so it turned out okay. You know, their cash flow was delayed, but he ended up making double his money within 2 years. Part of that was the market going up, obviously. So exits on those big deals is important, but you know, stuff happens, and as long as we're, you know, knowledgeable and have teams in place, we can get in there and deal with this kind of stuff.
Could I say something real quick, James, on that?
Jump in.
I love what you're saying, man. It actually made me think of several real quick stories. So I lived in Kentucky for 27 years before we met. And we had a history-breaking record ice storm one year. It was like broke all kind of records ever in the longest recorded history they've ever had.
Broke all kinds of trees too.
Broke trees.
I was actually living in Kentucky at the time.
Yeah,
too.
I mean, it was I don't know how many, probably millions of people out of power for extended periods of time. So whether it's hurricanes, tornadoes, earthquakes, ice storms, whatever. I mean, we live this planet. It's moves and shakes and quakes and the different things. And so I think, again, I loved what Katie Marie said. And I love what you were sharing too, about some key takeaway points that anybody listening to this can really find value in a practical sense of, number one, not letting fear be your guide, because I've never seen that work out well for anyone. Of course, some fear can be healthy, running from a bear so it doesn't eat you, that kind of thing, like that, within the context. But most people live lives of fear. Therefore, when you look at their lives, most people live very limited lives versus the limitless life that we believe we're all meant to live, a limitless life. But why is that? Fear is at the root. So whether it's talking about weather, the doom, or whatever it is, if fear is the leading narrative and people get sucked into that, then it's very gripping. It's constrictive. It's not liberating, right? Yeah. Faith is liberating. Fear is so constrictive. And so no matter where we're at, right? So, and people can miss on opportunities, or they can say no to otherwise, like you said, your friend, I mean, ended up doubling, even though in the meantime, yeah, there's process, there's things that happen there. I mean, but I loved what you said too. So the takeaways for me were not letting fear guide you in life or in business, real estate, and relationships, like getting a healthy view of seeking truth yourself, right? And then also, like you said, was so powerful, of having the right people around you, because then we teach, one of the things we teach is leverage everything. Leverage other people's time, talents, abilities, resources, networks, relationships. When you live a life that way of leveraging, I think Henry Ford was the one that talked about the mastermind principle, right? And people were like, wow, wealthiest man on the planet. But he didn't, he focused on what he was good at and what he enjoyed. And then he just surrounded himself with other people who had the expertise, right? In whatever time he needed to know whatever, he could find out. He didn't have to go research and learn all of this stuff, right? So whether it's you want to know about climate change or anything, like, it's great because you can have one minute or 5 minute conversation with someone who's already spent years or decades studying that thing to get kind of the extract. And so I love that you said surrounding yourself with the right people. Yeah. So then when you go to navigate uncharted waters, whether it's a natural disaster that you're like, whoa, what do you do here? Or raising children, or buying real estate, or private money. Like, there's someone who's already done it and done it very well for an extended period of time, that they have that expertise and knowledge that you can literally pull that lever and download right through a conversation, that knowledge into you to navigate something that otherwise could have been catastrophic for you, but ended up being a catalyst for you into new realms of abundance, because you leverage that connection and conversation. So I love that you said that, man. It's so true and powerful.
Yeah. Tim, did you have something to add to that?
Yeah, sure. So, I mean, I was actually in the Cape Coral, Fort Myers area last week. So, I mean, it was obviously hit pretty hard. I don't want to say the majority of houses have tarps on them, but at least half of them seem to. So, I mean, without a doubt, the hurricane had disastrous consequences. What I can tell you is I know a lot of investors buying in the Cape Coral area, and it's not scaring anybody. So, I mean, people are buying in Florida in mass right now. If anything, people are targeting Florida. A large amount of the investors that we speak with every week are buying in that exact area. And I can tell you that none of them are running away. So, as was previously mentioned, you could lean to what other people are doing in order to make your own decisions. And if I know people that are building 100 houses in Cape Coral and they're just going through the hurricane too, and they're not afraid of it, for me, since I know 3 to 4 people doing essentially the same thing, that would make me feel pretty comfortable with it, because I know that that area is a hot spot right now. So, I mean, obviously it got hit, and that's unfortunate, but people are still buying, people are still building, and there's still money to be made in the area.
Yeah. Well, one other thing that was in the article, or a couple things, was construction methods, improved construction methods that can handle some of these storms, and then insurance. So, David, did you have any comments on those or anything else?
Yeah, sure. I mean, I am an engineer by background, so I read articles and I end up analyzing them and everything. But so I try to take away from it. The article starts out, about a study done in Tampa, with a $200 billion in damage. Thought that was a little bit kind of ironic because I happened to be in Tampa during Hurricane Ian. And so I landed, on Monday of that week to find out that I was stuck in Florida and couldn't get out of Florida. And so I ended up, quote, riding the storm out because one, my rental car wouldn't let me take it to another city. They told me they would have me arrested if I took the car out of state. The hotel basically said, oh, there's nothing. This is no big deal at all. I'm not going to refund any of your money. So I ended up staying there. And, I tell you what, there's, like Katie's saying, don't believe the hype. Now, I'm not saying that storms aren't real and they don't cause tremendous damage, but, the news is there to make news articles like that on the television screen with it. And so we actually did lose power in Tampa, which was strange because it kind of totally missed us. So there was some aspect to, I didn't have power in my hotel room for 21 hours, even though it went completely south. But, how do you predict these things? I mean, you could have taken off to the Villages or Orlando and you would have been running into the storm. So it's kind of hard. And so I think if you look at that article, it is, analyzing factors that are involved on disasters. Now it's hyping it up from, the entire United States isn't going to all have hurricanes everywhere, right? That's that fear factor, and don't let that fear rule your life. And I could quote a lot of Bible verses on that. But, what you want to take away, I think, from that article is two factors that I saw in my analysis was it comes down to two things. How do you adjust for it? One is insurance rates, and two is construction materials. So over the past 50 years, if you go look at my dad's house that was built in the 40s and houses built today, construction standards have changed all the time over the years. So, maybe our solution to minimize some of the damages and loss of life is let's just learn from these every time and build and change our building standards. And I'm not saying to do this for the sake of raising permit fees, but let's figure out and use technology to develop materials and methods to build homes that stand up better to these types of things. And the other one is, insurance. So insurance will always be there, to cover you. And so it just means your rates will go up really high. Well, interest rates just went from 3% to 7%. Things change all the time. It's just an investment and the cost of that investment. So, it's just normal economics with it. But, it was, an interesting article. I am really glad to hear the report, that investors are flocking to Florida because, real estate investors are part of the solution, not part of the problem. Okay. We can move quickly. We can move instantly. We can move in there and we can recover those houses. We can bring them back up to the standards that we need people to live on. If we depend on the government to do that, those houses will sit there with blue tarps till kingdom come blue. But real estate investors are smart, and then we can help be that solution in whatever area of the country that might happen in. So it's not about fear, it's about opportunity and a heart to help people.
Yeah. Does anybody else have anything to add to that before we jump to the next news item?
Well, I'd also love to just say quickly, you just take our country. You've got like up here in Michigan, you have tremendous winter storms, especially with the lake effect snow that can absolutely, it can dump feet and feet of snow, and structurally that will destroy things. You've got people drowning from being on the ice, different things. And then you've got like all through kind of the south, mid-south, you've got the tornadoes that hit out of nowhere. Of course, you have the earthquakes over on the West Coast. You have hurricanes down kind of where we are that go through all of the different islands and, sometimes hit Alabama, sometimes hit Louisiana or Texas or Florida. So the thing is, like, this earth is like moaning and groaning. As David mentioned, it's constantly moving. It's alive. There's a lot going on there. So we just have to remember that this earth is temporary for us, and there is nowhere that you can live that you're going to be completely free and safe from any natural disaster, from any kind of climate change or whatever you want to call it. And so it really is about doing the very best thing that you know to do. And as you know, many of these gentlemen have mentioned, having the right team around you, analyzing properly, and then really just being led according to your spirit and how you feel you're supposed to go. And it's so cool because, you know, you had mentioned in your story, James, about how that that catastrophe happened, but then they were able to double their investment. If they would have been able to get out before closing and before, if they knew, hey, a hurricane's going to hit, it's going to demo everything, he probably would have gotten out of it and he would have missed out on that double portion blessing. And so we just have to remember that there are blessings in disguise with things, and we can't possibly control everything. And so we just do the best we can. There's nowhere we can live, you know, even in a padded cell somewhere, there's weather outside of that.
Totally. Yes. All right, let's go to the next news item. So real estate investing app Fintor raised $6.2 million at an $80 million valuation. This is on TechCrunch. So just high level, what Fintor is a platform for non-accredited investors to invest in real estate. So it's basically fractional, put small amounts of money in and get into one or multiple properties spread across different markets. How do you guys see this? And they're not the only ones. There are other platforms as well. How do you guys see this as changing the landscape of investing? Good or bad? Anyone jump
All
in?
right, I'll jump in here. Obviously, as we go on and on, technology is going to continue to change and disrupt the industry. So, I mean, I don't think this is necessarily a bad thing. I think this is a good thing because you're making it open for, you know, the entry-level investor to start investing. So, I mean, you're also seeing similar tech startups like this in cryptocurrency where they're kind of tokenizing real estate. This sounds very similar to that. I don't think this concept is going anywhere. So this is probably going to continue to grow and grow as you know, it finds market share. But I mean, I can tell you that this is not the only company, and obviously they had a pretty good start, right? So this is likely a wave of the future, especially once the crypto stuff gets more developed, because that's already been done. It just hasn't been done well yet.
Yeah. What do you guys think? Go ahead, David.
Yeah, this is, you know, technology to me is amazing. I take this. Some people hate technology. Some people love technology. I mean, that's probably, you know, similar to a lot of topics in life, but I think it's all about perspective and utilization and you, right? So what is your perspective? What personally, and what or how do you use it or not use it, right? And so, you know, I mean, computers, communication devices, these phones, I mean, have been used in the hands of certain people to do amazing things, save lives, generate more abundance and wealth than ever before, set people free. And also that same tool has been used to destroy them. So again, to me, with technology, it's more about the human whose hands that it's in. And we talk about this a lot with our students all the time. Like, you know, you can take any tool to build a house, a physical tool, a power tool, whether it's a hammer, whether it's a saw, whether it's a power tool, and it can be used to build communities, build housing, shelter, do all these amazing things for humanity. And it also, that same tool can be used to kill someone, right? And so it's and destroy life and to create harm and destruction and tear down houses or people. So I think when I think about technology, and I'm not saying this specifically in relation to this app, like it could be, you know, deadly. I'm not saying that. I'm just saying my perspective when I think of technology in general is I think technology is a great thing. It's more tools for us to leverage and harness, whether that be in communication and connection. I mean, think about the connection. These crowdfunding platforms where anyone can get in and start participating in real estate investing that otherwise wouldn't, right? On a passive level. So I think two things I would have the listeners think about and learn about and lean into if you're new to real estate or even if you're seasoned is, you know, within real estate, that's a big overarching, you know, real estate investing or real estate in general. There are so many niches, right? That all of us here have different niches that we've participated in, focused on, got good at what we do and help people do. So one broad stroke is like passive investing and active investing, right? So something like this where someone can jump in for as little as $100, $1,000, things like that, and participate knowing that, wow, I'm a real estate investor. I'm investing in real estate. This money is going into a real estate building, an income producing rental property or project development, whatever it is. And you know, that's cool. And it's a passive investment. But just know, I would advise anyone looking into doing that a couple different things. If it were me, because we don't do much passive investing ourselves, we're more active investors, meaning, you know, where we put our money into real estate projects, we are the majority or one of the majority owners. So we have decision-making power and control over how the asset is managed, handled, renovated, because that's where, in my opinion, from my experience, you're going to make the most amount of rate of return on whatever money you ever invest in real estate or leverage other people's money to invest in real estate on your behalf. Is how are you positioned financially in the asset, right? Because if you're throwing $100 or $1,000 or a few $1,000s into a passive investment spot, just realize the difference. Like, you're not going to get to say what tenants are living in that property, who's managing the property, how much money is spent on the property, if it's even profitable or not. You're not going to really have a say, you know, in that, other than maybe a vote or something they might do depending on who. So my other recommendation would be also, if you're considering putting money passively into a real estate project, is if I were you, I would want to know who the general partners, the main people controlling the decision making on the asset.
Your GP. That's usually what you'll hear is GP.
GP, yeah, for general partner, the majority owners, right? Because they're the ones calling the shots on where the money's being spent, allocated, you know, who property management is, renovations, expenses. So that affects you, right? That affects whether you make money, lose money, or have a low rate of return or higher rate of return. So I would at least get those insights if you're considering putting your money into a passive role. It's just, again, we were talking about this earlier, partner with the best that you can find, right? The people who are making the best rate of returns, and they have a track record of making their investors happy and making their investors more than the average rate of return in these passive type investments. That's who I would want our passive money being put towards, in the hands of people who have a proven track record. They have the knowledge, the know-how, the experience, the track record of doing well by their investors that are putting up money, even if that's a small amount of money. Number one. The other thing I would think is, I see it as a great thing because people can stick their toes in the water of real estate and be like, man, I'm a real estate investor, you know, and you are. And I think that could breed some momentum for more people wanting to know more and get closer and more involved in the real estate, you know, world and investing game, because it's an exciting, powerful opportunity for anyone. And that's why it excites us so much, is that anyone can start from where they're at and really go take the vehicle real estate, allow it to take them to wherever they want to go and beyond.
Yeah, everybody's got to kind of figure out, if they're looking to invest, like where they fit in. And that changes, right? Like with multifamily, there's a lot of training around that, and a lot of people will get into it and start learning and find that they don't want to be active in putting deals together. They don't have the time. It's just like, there's so much to it. And so they end up becoming passive investors, but they've gotten to know those general partners that are putting on those trainings, and they're comfortable with them. So they've kind of found where they're comfortable.
Yeah,
for themselves.
Yeah, James. And one other thing I'd love to add to what you're saying is that most times for most people, I think, ends up being the biggest value of it all. Not the rate of return, dollar for dollar, that you're getting from putting $1,000 or $10,000 or $50,000 in a passive investment, but the behind the curtain look. I mean, that otherwise, who knows how many years or money or tens of thousands of dollars you'd have to pay to get education on, when you can place yourself in a passively invested role, right? Get a rate of return on your money. Your money's making money for you while you sleep. That's great. Backed by real estate, as long as it's bought right in the right location, all managed right, all of that. But more than anything, more than whatever rate of return you get, it's the knowledge. Like you were just talking about, getting relationship capital, right? With other people who know more than you, because you're getting the power of proximity, right? That's one of the things we talk a lot about. So by you being one of the investors in that, even though you might be a minority, you might be minority financially speaking in the deal, you're getting closer proximity. You're taking steps in that direction to get close to people who are making millions, hundreds of millions of dollars in real estate. And you literally get to peek in, right, for free. I mean, you're just investing, but you're getting that proximity to see behind the curtain on how why are they making certain decisions on who's managing the property, what's on tenant screening, on, when tenants move. I mean, all the things that then you can take that knowledge and be like, wow, maybe I do want to either go actively pick up some properties myself, or partner with someone and still be passive, but have more of a controlling share and interest in the property, where someone who loves the construction side of it, the contractor or whatever. But because you've gained these powerful insights for people who are operating at a much higher level and playing the game at, a bigger level, it's basic and simple steps, right? That then you can leverage and partner with people you already know in your community, the contractors, the property manager, and do some big, exciting, powerful things, still with not having it be a full-time thing for you having to go all in like that. So that's really huge.
Yeah. David Randolph.
Yeah, I guess, if I could respectfully disagree a little bit with David and Katie on what they just said. I think that this app may not necessarily do anything what you just said. What you said is great, and it's right, but I don't see anything that says these apps allow any of that to take place. This particular app allows an investment of just $5. And so this allows the masses to basically invest in real estate, but I don't see anything from what I know this app that it lets you know anything about even the address of the house, the management, the selection of tenants, or anything in how it's done. And I'm not saying that the app does or doesn't have that, but it's just the article doesn't state anything other than it allows a minimum investment of $5 with it. So it could be treated almost purely like a mutual fund. That's a lot different than stock investing. I bought mutual funds for many years, and there would be 50, 100, 200 companies in that mutual fund. I put my money in, and I learned about the mutual fund and its rate of return over the years, but I had no clue as to how to do moving averages, profit and loss, PE ratios. That was done by the fund managers on the individual stocks. So I think that users need to really look at the particular app and what does it do, because I think it's great if it does what David is saying, but not all apps maybe necessarily bring you in at that level. At the $5 level, I don't know if they're going to be providing that. To me, this app almost seems more like a lending source. Okay, in other words, it's just a way for the professionals like us, we're professionals, entrepreneurs, to gain a secondary access of funding in a way. So that, to me, this almost looks like a lending type thing where they can, like the crowdsourcing funding with it. So it'd be interesting to see if that app provides any of the things that you say would be good for investors, and that would be the apps you'd want to use. There are some people that even have said that these kind of apps cheapen the industry, right? Okay, I've heard that from some people, that having apps. I mean, it started with Robinhood and stock investing, and then shorting some of those stocks, and it got in the news and stuff. So people are saying, well, is that going to happen with the real estate industry with it and stuff? And I don't think there's anything we can do about it. I don't think it's going to cheapen it. I think it's going to make the industry change, because I agree with David and Katie that we want people to come into the real estate world, because it's been so successful for us, and if it helps them to become invested in it and to start to learn from it, then they can choose to get higher returns by being the property manager themselves, or to be the rehabber. I choose to be the rehabber. I want to provide housing for people directly with it and stuff. And so, I don't think it cheapens the industry. There's other people that, have said that this could cause a bubble. Well, that's certainly a possibility. I mean, look what happened with interest rates during the pandemic, going from, from 4% to 3.5% and 3%, home prices went up. And so you had cheap money. And so when you have cheap money, there's no risk factor for those people with that cheap money. And so you have a tendency to overpay. And so if we have these apps where you can just jump in at $5 and you're bringing in, $100 million or $5 billion more cash, chasing only so many homes. We only have like 3 or 4 months of inventory of houses out there. We used to have 2 months, and you got a lot more money chasing real estate, through the common person. I think that is a danger to be aware of with it and stuff. I mean, I think it'll play out over the long run, but it's just another source of money for professionals like us to do our job. That's kind of my overview of the article and the app, basically.
And just to clarify, I agree with everything you said there, David. I guess I didn't actually read the article, and I don't even know the details about this app specifically. I guess what I was saying is out more of a broad stroke in general about like crowdfunding platforms, passive investors platforms, things like that. If you can, like David's saying, if you can leverage that to get close proximity, behind the scenes look on properties specifically, that was more of where I was thinking, not specifically this app, because I don't even know what all it does or doesn't do, this app specifically. But so, yeah, I agree with everything you said. There are great points as well.
Yeah, and I think just to clarify, we kind of went off on a tangent about multifamily, which is bigger chunks of money, maybe $20,000 to $50,000 buy-ins, where it's complex, and people that are putting that kind of money in definitely are going to want to know what's going on behind the scenes. Where, an app where you can put $5, $10, $100 in, like you're not going to want to be doing or need to do your due diligence as much, or maybe you should, because then you might be wanting to put in more. Because I don't know what the limits on these apps are, but yeah, so that's kind of different levels. I just want to clarify that. So, hey. Just real quick, are you guys guests seeing the private chat?
Yep.
You can see that. So, and I also wanted to call out Antonio Holman in the background, putting some questions in the background. He is our producer, the founder of this. He just asked me to be the guest for some reason, and but he's orchestrating everything, and he's a badass. Thank you.
He's an amazing man. He's an amazing man.
Yep, is awesome. So yeah, if you guys see any questions that he's posed in the chat, go ahead and jump in and answer those. Let's jump to the next one, and it's related. So Bezos-backed startup lets you become a landlord with $100. This is on Benzinga as well. Funded by not only Jeff Bezos, but forget there was. Yeah, the founder of Uber and the founder of Salesforce. So there's some big money going into the app. I'm trying to remember what was much different about that. But if you guys remember anything and want to comment on those kind of people getting in on this, any feedback?
Well, I think that there's blue ocean space in everything, because we basically just need to create a better mousetrap, right? So like take a can opener, like everybody has a can opener. There's a million different kinds. There's the kind that like won't cut your finger if you run it on the edge. There's like the normal kind. There's a travel size, like all of that. It's like Jeff Bezos and these different like tycoons in their industry, and they've got a ton of money and a ton of power. I just get nervous for the average consumer who isn't educated when they're like, oh, this can be the next Uber. I need to jump in on this, and I'm going to, cash in my 401k, and I'm going to throw all of it in there, my self-directed IRA and all of that, because this is going to be Bitcoin. And if I would have invested $100 in Bitcoin, I'd be a multi-billionaire, all the things. So it's kind of like when real estate isn't these moguls' passion, and they're just seeing blue ocean space where they could just make a ton of money. Now, I don't know their hearts for sure, and I don't know their intentions, but I just really encourage people to exercise caution when, something sometimes sounds too good to be true. Become a landlord for $100. Number one, I think being a landlord is a calling. I think it's something that some people are meant to do and some people are definitely not meant to do. They're meant to have property management in place. Some people love having a small portfolio of properties and they want to manage it themselves and they want to know the names of everybody's kids and send the Christmas cards, which like we do all of those things, send them gifts, that kind of thing. Even though we're scaling, we still want to have that close, intimate touch. And we probably won't always manage our portfolio, but like just anyone who knows nothing about investing in real estate, like, yeah, I want to become a landlord for $100. Like, do they even know what a landlord is? Do they even know what goes into being a landlord and the nuances? I mean, we have tenants constantly with health issues. We have tenants where a spouse has passed away, where a child is sick. It's wild that the average American, I don't know the exact number, but they're like one paycheck away from being homeless. And we have tenants all the time, they can't pay their $850 rent because they didn't get one, bi-monthly paycheck. And it's just wild. So there's a lot of dynamics into being a landlord. So when you have the who's who of these other tycoon companies jumping in to like a brand new real estate space, they may be investors themselves, but I would definitely just do your due diligence as a consumer. And same thing with the other app, don't just throw money into it thinking that it's going to become the next this or that. You are a steward of the money that you've been given, and you need to take care of your house, make sure your house is in order, proverbially, and make sure that you know basically what you're getting into to the best capacity that you can.
Yeah, go ahead, Tim.
So absolutely. I mean, my primary concern, if I was somebody looking to invest in an app like this, is what is the due diligence that they are doing, and how do they analyze whether or not a property is a good buy? Because I don't know about the rest of your guys' markets, but I mean, most of the people I know, and my market is certainly in the decline right now, and I still have 1 to 2 months inventory. So I mean, if we have prices going down with inventory as low as it is, we need to make sure that whoever is making the decision on which properties that they're acquiring is taking that data into effect. So I mean, I'm bearish on the market right now. So I would hope that they're doing something where they're super transparent on what their due diligence is, and when they choose what properties are worth acquiring. So I mean, if that data is not transparent, for me, it's like a hard pass, because they could be buying anything in market value, and currently in a lot of markets, market value is in decline. So that would be my primary concern. Like, what are they doing for due diligence? Are they fully transparent? Do we know what we're purchasing a fractionalized share of? With that knowledge, it might be a worthy investment. But I mean, unfortunately, we don't have all of that. I could say that, the people, the spearheaders of this, we have Salesforce, Amazon. So, I mean, we do have some intelligent people at the helm here, but I mean, I would need more information on their due diligence process before I could give a recommendation one way or the other.
And can I slip one more thing in there, totally on Tim, what you're saying? So the wild thing is, how are you actually going to verify that it is XYZ home, that they're the one that purchased it, all of these things? And I mean, are you going to file a lawsuit against Jeff Bezos? Like, no. So just remember, I think it's wise to, again, we're like constantly hitting on do your due diligence because it is of the utmost importance. But also I would say, especially when these apps are just kind of up and coming, don't invest any money that you're not willing to say bye-bye to, like ASAP. Like, oh, I'm gonna throw $1,000 in there. If it does something, that's fantastic, but I'm happy never seeing that money again. And I mean, I would say even billionaires, like they enjoy their $1,000. And so, just be wise with what you're doing and understand that you're not going to be able to you're not going to get to be behind the curtain with the wizard. You're basically just trusting people who have massive legal teams, and you would never be able to make a dent to try to get any investment back.
Yeah, I agree with Katie too on this. You've got to watch out where the big money goes. Um, one of the things you have to ask right off the bat in this entire, Jeff Bezos, Arrived Homes, and even the apps is, where is the security of your principal? Okay, will you get your $5 back, or will you lose your $5? And what happens if you lose your $5? Is Jeff Bezos going to guarantee it? So that's what you really have to be careful of in these app type situations, or this landlording, become a landlord kind of thing. Let's think about this from an economic or even investing perspective. We're entrepreneurs. We're not passive, or at least I'm not passive. I rehab houses and I sell them. I find the houses. I negotiate. I do all these things. I bring value to the whole situation. If you're just going to plunk down $100, and someone else is going to do the work, you've just added another layer of cost onto it. It's just like a wholesaler. God bless them. They're very important. But what do? They make $5,000, $10,000, right? So if you, as a rehabber, went straight to the homeowner and bought the house, then you could get it cheaper, okay? But we don't do that. We add a layer of cost onto it by a wholesaler doing the work. So now this Arrived Homes, this article is basically adding another layer of cost in it. So how does Jeff Bezos and these people think there's still going to be enough money made in the situation with it? And so they're going to have to be very good on buying houses. And let's think about it. Jeff Bezos is not going to be your property manager. He's not going to be buying your houses. He's just the money guy. Now, he might be smart. I don't want to say he is or he isn't and stuff. And so he may hire the right people. Well, let's think about it. Who is he going to hire? Okay. He might be in great shape, if he hires David and Katie, because they sound really smart. Maybe if they hire me, I might be able to help him out. But am I going to go work for Jeff Bezos? Absolutely not. So he's going to have to hire people that might be mediocre at what they do. Because if you're really good at it, we're killing it ourselves. Okay. So why would we work for somebody else? So his team, by definition, is not going to be top rate, at least in my opinion, from what I understand.
Wow, that is so powerful.
Yes.
Wow, incredible insight.
Yeah. And we've got another article that we're going to talk about with iBuyers, big companies that are in trouble. So let's take a break and hear from our first sponsor. I'll actually be reading off the script, so it's not anything prepped. So, are you ready to ignite your financial freedom with what has been called the hottest REI strategy around, or should I say strategies? Enter Jason Palliser 2-day investment blueprint, where you'll learn the secrets that the real estate investing community doesn't know because they never had a reason to before. With Jason's 2-day investment blueprint, you will learn how to tackle real estate deals with over 40 different strategies, which means your chances of losing another deal nearly disappears completely. In Jason's 2-day life transformation intensive, you will learn how to get more deals, close deals faster, win more deals over other investors, multiply your real estate deal strategies, and much more. Jason Palliser's 2-day investment blueprint can help you grow your REI business to 6 and 7 figures faster with much less aggravation. If you want to learn how to actually invest well in any market in the United States, even tough markets, and close multiple deals per month, visit 2dayblueprint.com. That's 2dayblueprint.com. The number 2, not spelled out TWO. The number 2dayblueprint.com. And make sure you tell him you heard it here on This Month in Real Estate Investing. Don't believe the no more good deals hype and visit 2dayblueprint.com. All right, there we go. So let's see. Let's go to the next news item. Let me get back to my other doc. All right. So this one was titled, How Much You Would Have Made or Lost Investing in Real Estate at the Height of the Market in 2007. I kind of want to throw out what happened with me, just a little personal. So I bought my personal residence in 2006, thinking I was going to be okay. And then guess what happened in 08? We all know what happened in 08. A lot of people panicked, sold, and lost a lot of money. I was able to hold that as my primary residence and sold in 2019. I doubled my money, but for a while I had no equity. If I sold, I would have lost a lot of money. You can go both ways. So that's what this article is about. Anybody want to jump in and give their thoughts on that?
The first property I bought was in 08. But my thought is that it really depends on your strategy and your utilization of the properties, because even the successful investors that I know personally that have been doing it for 40 years, for us, we buy based on cash flow, number one, mostly as our main metric, because we're not as concerned, when people talk about property values going up, going down, all of that, and no one has a crystal ball of what property values are going to be a year from now, 5-10 years from now. So for us, when you buy right in the context of cash flow, profitability on the income side of things for what it can rent for and how you're using the property, then we sleep great. People are like, what if, another crash, or you lose 50% equity of your property values? It's like, we don't care, really. Honestly, some people may disagree or think differently, but for us, and in conjunction with that, when that happens, most times from what I've seen is that, you actually make more money on the income side, right? Because if less people are buying houses or properties, then what are they doing? They're renting, right? So it's just basic supply and demand, for the property owners and landlords that own income producing rental properties, you actually have, increase of income and financial flow. But yeah, so people buying at the peak, then, this last peak, the peaks, all the previous peaks that have existed, to me, I think it's a few things. Liquidity. So the people that we have seen, and you guys, I'm sure, have seen, or maybe yourselves have experienced losses or having to liquidate properties or whatever. I think it was an issue for most people of liquidity and cash flow. I think those are two of the main pieces of the equations, because they didn't have enough cash reserves or access to cash to float through a transitional period of either structuring on their financing side or being able to, cover their debt servicing on the rental income side of things. So for us, it's always been about buying based on worst case scenario. And of the dozens of properties that we've acquired personally, 100% of them have been very profitable. We've never lost any money on any deal. We don't ever plan to. And that's not about us. It's about the process we follow on a conservative basis of what's worst case scenario on renovation, on current market value, after renovation value, on what we can rent it for now and later. Because in our minds, when we make a purchasing decision, we position ourselves financially in a property. We're thinking, even if it hit the fan like it's never hit the fan before, and it's the worst crash ever, and half the properties are vacant, our properties are going to be the half that are rented. Why? Because we bought on enough margin where we can drop our rental price points to whatever point we'd have to drop it to keep it filled, and it still pay for itself, at least pay for itself and break even, if not still generate a profit. So for me, I think it's more about that long term. Now I can see where on the flipping side, of course, people got caught. What do they say when the tide in the ocean? We're ocean people. So they say, when the tide goes out, that's when you find out who's swimming naked. You know what I mean? Until the tide goes out, you don't know if they got trunks on or not. Everybody looks the same, right? Same financially speaking. So let that sink in. Think, marinate, meditate on that a little bit. Think about this. You look around in great times. It's like this last real estate boom and stock boom and digital currency. These millionaires, these young kids that threw money at the right time, they look smart, but they had to have zero knowledge. People that are in the right place, right time, anybody can throw money in when real estate market's going straight up or stocks are going straight up and make money. The real question is, who's making money in all seasons, all cycles, at all times? That's who you want to follow and learn from, because there's a lot of people, us included, in all the cycles since we've been investing, we've made money. Even through COVID, we had our biggest financial increases in profits and cash flow. And during COVID, you could snapshot it by the month, by the quarter, by the year. And why though? The strategies of setting your sales, are you beginning with the end in mind? Do you have a long-term approach? And in the immediate, are you structured right on your management, your financing, your utilization of the property to where even if it has dips and changes on, again, interest rates, people get freaked out about interest rates. Well, then again, adjust your strategy, get long-term fixed rate loans on your properties, right? Is one of the things that we do. So I think that's just a few quick thoughts that I have on it. I mean, of course, this could be a whole discussion about all the dynamics involved in market cycles and losing money, making money. But that's what I've noticed is when the tide went out last time, you saw who was swimming naked and they went bankrupt and had to liquidate. They made all these millions and worked all these years to make it and then lost everything because they were over leveraged, they were overstretched, didn't have the liquidity or the financial structuring or debt servicing or financial positioning properly to cash flow through fluctuation. That's key. It's simple. Anybody can do it, but people get too nearsighted and either greedy or not looking at what I believe needs to be looked at on the big picture to win financially in the immediate and over time.
And they get excited because, oh my goodness, I found this house and it's like, everything about it is perfect. And then you're looking at cash flow and running the numbers and it's like your margins are super squeaky if like anything goes wrong with the house, with the market, but it's like kind of that shiny object syndrome. And so like we always teach our students to be extremely conservative so that, again, you do have that buffer. And, many people have speculated that a correction is coming. It's coming. And we've definitely seen a correction in the market. And where we are in Sarasota is actually Redfin did market research and they found that exactly our neighborhood is the number one hottest market
at that time. A couple months ago. And I believe like 8 out of 10 of those markets were in our county. But, we have seen homes staying on the market just a little bit longer and, definitely prices have fallen just a little bit. And I mean, what goes out must come back. Like there's always going to be corrections, but just positioning yourself in the best case scenario so that what you have is extremely profitable and it will be even in a recession. And then also make sure that you're properly positioned so that you're in a buying seat when everything goes on sale. Like who doesn't love a sale, right? Yeah, building those relationships with the private money people.
Yeah.
Got some in the house today. David once said he wants to give his money, right?
And if I could just say quickly, just to clarify, we are all about win relationships. Anyone and everyone who's involved in a deal, in a transaction, it has to be a win and a blessing for them. And so, when there are corrections, people are upside down, they're super leveraged, and they need to get out from underneath the weight of that mortgage, of the double, like second, third, and reverse mortgages, all these crazy things. And so you can become a solution specialist. That's something that we really teach our students is to become a solution specialist and help that person be able to get out from the pickle that they've found themselves in. So it's not like, oh yeah, everything's on sale and I'm just going to wash and like get everything that I can. It's all about having that right perspective and making sure that every single transaction is a win-win-win.
Tim or David Randolph, what do you think? We're diving a little bit deeper. The 2008 crash versus now. What do you guys feel is the difference, or is it exactly the same? I know we've all had these conversations, so.
Well, I mean, there's a lot different, obviously there are much tighter mortgage standards now than there were before. So, before you could basically do no income, no document loans. So, we don't quite have that problem now. The FHA and so on and so forth, they're far stricter with the lending criteria than they were before. But that's not to say there isn't reason for concern. But what I can say is that, there's ways to make money no matter where the market goes. So you just have to shift with the market. So, you utilize a strategy that is effective in the market cycle that you're in. And, right now, you might not be looking at short-term strategies. If you're a wholesaler, if you're a fix and flipper, you might still want to do it, but you're going to have to be way more conservative with your numbers due to the changing market. So right now is a much better time to be doing long-term investments. If you're doing creative financing, there's a abundance of opportunity in that realm, especially in the rent-to-own space. I know Mr. James Brown is familiar with that. There's an abundance of opportunity no matter where the market goes. So you just need to be flexible and be able to adapt to wherever the market's going and have a little bit of foresight. I mean, obviously nobody has a crystal ball, but try to predict what's going on and be conservative when you should be conservative and be aggressive when you should be aggressive. Because as I previously mentioned, if it does crash, it's the biggest opportunity in the world. That is when most millionaires are made, is during a recession, during a market crash. So don't be afraid. You buy when nobody else is buying. That's the best time to buy. So there's nothing to be afraid of no matter where the market goes. That's what I would say.
Yeah, I'd like to add to that. I agree with Tim, and I was going to kind of, a lot of people like to quote Warren Buffett, and so I'll just quote what he quotes, which is basically you want to do the opposite of what everybody else is doing. So this article is talking about basically long-term holds. And I think that's just one small part of the market, in my opinion. Yes, it is wealth, and it is, what you do to create wealth, but it's just not what you really have to be stuck with. In other words, if you can learn how to rehab houses, if you can learn how to buy, subject to the existing loan, if you can learn how to do short sales like I do, if you've got a transaction engineer type mindset, and the ability to rehab. Okay, so that you can pay other people to rehab your houses. I couldn't hit a nail with a hammer to save my life. Okay, I pay other people to do that. I run real estate as a business. So I think that article is just focusing on, what was your risk factor if you had screwed up and bought at the high point of 2007 and then waited till 15 years later till we hit the next high point. Where would you be at? And basically, you would have made 71% on appreciation in your home. Well, quite honestly, that's not very much, in my opinion. That's 3.7% a year. And if you would have bought the 30-year Treasury bill in that same year, you would have made 4.8%. Okay, so what I prefer to do is let's do the buy when people are afraid and sell when people are doing this thing the opposite way. So for me, I look, why don't I rehab houses and make a lot of profit when there's no inventory and people need houses really bad and interest rates are low, okay, and sell a lot of houses. I buy houses and make a lot of money, and I got this cash, and the market turns down. Hey, why don't I buy my rentals at the low spot? So they're talking about high to high, okay, high to high, however that is on the screen here. But why not buy low and maybe not even sell high, but at least buy it low? So do what fits the market at the time. Don't be a one-trick pony. Be a transaction engineer and have full understanding. Now, you've got to start out small and get good at what you do. But as you get in this industry, especially if you use coaches and mentors and training, okay, this is one of the best industries in America for training other people. We got, so much more education. It's so much more effective than the colleges are with it and stuff. And so, you can't go to college and, start, learning by working with somebody. In real estate, you can get a coach, you can get a mentor, you can work with somebody directly with it. You don't have to spend 4 years in school. So I kind of take the approach that, you want to do what's working for the market at the time. And so you just kind of roll with the punches and everything. So that's kind of my viewpoint of what to do with it. It doesn't matter, I don't know if we have another article coming up talking about the market crashing, but it doesn't matter if it crashes. Okay, you can make money in a crashing market, and you can make money in a rising market. So we focus on what's going to happen in the future, but really, don't let it slow you down. I remember when I was doing some mutual fund investing a long time ago, and the market was kind of rising, and so you might have a 5 or 10% drop in the market, but if you spent 6 months worrying about it and thinking about it, and prices went up 20%, and it dropped 5%, you lost 15% gain you could have had if you just made a decision and got involved in it, and done your analysis at the time. So, I think you really have to, be a transaction engineer is what I'm trying to say, I guess.
Yeah. This kind of leads into our next news item, actually, with the opportunity we've got. So the story is real estate investment companies selling Phoenix metro homes for $100,000 less than what they paid. Source was Arizona's Family News. So they dive into some specifics. Let's see, 2020 Valley Homes sold for an average of $368,000, then jumped to $508,000, and then up to $591,000. And they also talk about all these iBuyers like Opendoor, OfferPad, Zillow. That's a hot topic because a lot of them way overpaid, and now they're trying to dump them. And so in this article, they used Opendoor as an example. They had a home, North Phoenix home, bought for $710,000. It's currently listed at $584,000 and not sold yet. And Opendoor actually has 1,500 homes for sale right now. So, boy, there's a lot to talk about here. Jump in. I mean, I've got a lot of thoughts, but let's go.
Well, I'm loving watching them fail like this, to be completely honest with you. So, I mean, I guess this is just me. But Zillow, obviously, they lost like almost $1 billion on their house flipping estimates earlier this year, was what was reported, I believe, in February. And that was obviously no surprise to anybody that's in the real estate market, right? Because his estimates are absolutely worthless unless you're in a super cookie cutter area. So, I mean, I'm glad that these people are losing money because they're out there spending money extremely frivolously. So, I mean, they're just throwing money out there. They're not doing their due diligence. Hey, this is what happens when you don't do your due diligence. I mean, I have no problem with it whatsoever, personally. I mean, I think, if anything, the iBuyers are bad for the market because they're possibly inflating the market because they're throwing these cash offers out there, or they were inflating the market, rather, not so much anymore. But yeah, I mean, I'd say they get what they got coming to them, would be my thoughts.
Totally. This kind of goes back to that app too. I'm thinking like somebody puts in their $5. Who are they putting their trust into? Zillow. It's a huge name. They're trustworthy. They know what they're doing. They're all over the place. Maybe not. So.
I think, one thing on that, Tim, I love what you said. And it probably most all investors agree, right? Because the people who are out there, literally there, physically making, things happen on the local levels and even regional levels, sometimes the big money funds or companies or individuals, I think in these cases, anyway, this is just my thoughts, can get overconfident because they, feel like they're the market maker. Right. They have enough money to just make the market do what they want it to do to make their money grow and all that. And to some degree, it works in certain contexts and certain pockets of stocks and real estate with depending on how much money and what they're doing, what their strategy is. But in this case, when you have, we've all probably gotten those calls, the text messages, the phone calls, hey, will you sell your house? And so, they're just throwing that out there. Yeah. And it's so, like you said, there's no fundamentals, or next to no fundamentals and reality, right? It's an inflated, number that really isn't good for the long run. Again, people who are just like speculative or trying to hop in, hop out, like that's not, just like David, what you've talked about, what we're all here really talking about is learn, if you're going to do well in any game in life, or just video games, the money game of life, real estate, but like you've got to learn enough to learn the fundamentals, right? That are going to work successfully and have a proven track record versus just speculating and rolling the dice, because that's gambling. It's not investing. So that's the difference. Is I think people just need to get clarity and define, is what you're doing gambling or is it investing? Is it calculated risk, assessed, insightful, educated, data-driven, real life? And really, that's not complicated. Just be observant, right? Be observant. Just open your eyes. Increase your awareness of what's going on around you in the market, and the aha light bulbs will hit you. Like just like this topic here, it's like, people who are in it could see that coming. All of us are like, that's not sustainable. Yeah. it's just not. There's no. It's a house of cards, you know. And so that's what true investors aren't. In my opinion, the true investors that are successful in all seasons, they are always going to have that hard pass, as you guys were talking about, on like the flash in the pan, speculative, shiny object, roll the dice. Like that's just not appealing. Unless, like Katie Marie said, yeah, you can take your flyer shots on, hey, if this works, cool, it could be something. I'll put some discretion, some money that I, can do without.
Because I was going to gamble it anyway.
Yeah, I'm going to gamble. It's gambling. Yeah, it's so that was Bitcoin, these different things, and it's like, yeah. So that's my, some of my core thoughts on it.
Yeah, and the thing is, like, are these iBuyers killing the trust of real estate investors? If it's talking about from a perspective of us being a buyer looking to purchase a home, an investment, that these iBuyers have, I don't really care what they have it listed for, because we know how to do the numbers and how to, run everything and see if it actually makes sense, as in dollars and cents, if there's enough margin there. Like, we have strong criteria that it just has to filter through. And if it doesn't filter through, like, we're not going to buy it. I mean, you can list it for $1 million and it's like, okay, well, we're not gonna pay over $200K, and so let us know when you want to sell it for that. And then when it comes to home buyers who these iBuyers are purchasing their properties from, I think they're probably just singing a real happy tune that whatever iBuyer that was that purchased the property for over $700K. Like, I don't think that home buyer was sad at all. And then it's the iBuyer that's actually taking the hit, if I'm understanding it correctly, and they're selling it for almost $200K less. And so, I mean, I think a lot of home buyers, they're selling their home for many different reasons. Maybe they had a spouse pass away. It's a very difficult situation. Maybe they raised their children in the home and, lived the majority of their marital life in the home. And they're like, just done. I want to get out of it. I want to have a fresh start. Or, maybe there's a difficult divorce, or like, there's just a million different reasons. Or maybe they found their dream home and they're like, I don't want to live in this house anymore. Like, most home buyers, even though they are attached and it's like their baby, don't call their baby ugly, don't tell them, don't make too low of an offer on them because their baby's beautiful. But a lot of home buyers, like, if they get the right price, they don't care who buys it. If it's an iBuyer, if it's, it just doesn't even matter. And so I think it's another one of those situations, just like David said, the shiny object where these iBuying companies are like, oh, I've got the next best idea. We're actually going to be the middlemen and we're going to buy these properties from homeowners. And then, we're going to mark them up. And it's kind of like our own version of wholesaling, except like, iBuyer version. So I think that they're just looking ridiculous, basically. And, hopefully they can get their stuff together so that they actually look legitimate. Otherwise, I think someone else is going to come in and do it better, and they're going to basically clean house, and these other companies are basically making themselves illegitimate, and people just aren't going to want to work with them.
Yeah, and one quick case in point on that, this should excite all of you listening to this, is that one of the things we teach all of our students is create your own economy. So if people, in our opinion and from our experience, if you're concerned about gas prices or interest rates or the economy as a whole, it's really mainly because you just haven't yet learned how to create your own economy. Yeah. Because the wealthy people, a lot of the wealthy people, are making money in all seasons, like we've talked about, and actually making more money in recessions, depressions, those kind of things. Why? They set their sales and they know and be a solution specialist, adding value. Where's the need and the demand? But here's a case in point. So a few months back, we bought a property. Okay, it was pre-market. And so they were asking $1.125 million. Okay, this was still a hot market. It was months back before it started cooling off. And they were asking $1.125 million for this property. We bought the property for $640,000. Okay. And so that's exciting, step one. Because again, like Katie Marie was saying, an asking price It's just at an asking price. It's not the sales price.
Will
it's
you
the asking.
please buy it
Yes.
for this?
So know that and realize a lot of people, you all listen to this, you might be stepping over opportunities every day because you're running the numbers based on the asking price and you're never making an offer. Make offers. You never know. And number one, but here's the other part to that. Why did they accept our offer? We came with an educated offer. We brought insights from our inspection and everything else. We came and we brought data-driven offer and counter offers. Okay. That's a huge strategy right there alone that otherwise they would have never accepted that offer. Okay. And this is one of the things that we do. And this other part is we negotiated a seller financing. We got it at 2.6% interest. When everybody else was whining and moaning and crying about interest rates going from 3% to 7%, we said, who cares? We create our own economy. And we bought this property for almost half of what they were asking and at a 2.6% interest rate.
And the seller was giddy about
it. The seller, because again, it's all about win-win, but that comes through skillful communication, right? Of being a solution specialist and not just throwing it out there, random offers and hoping something sticks. That's more gambling than insightful, data-driven, education-based communication with people where you can make amazing things happen for you and them and everyone you're working with. And that's really, to us, like one of the big points.
Awesome. David Randolph.
Yeah, I mean, I agree with that. A lot of that. It goes back to this, following the Mayo formula. Okay. You create your own economy by following a formula. You have a certain ARV, after repair value of the home. You have a factor, you multiply it by that, and then you subtract your repair cost. And you don't pay any more than that. And that's probably exactly what David and Katie showed the homeowner and said, look, there's no way that this is going to work. Can you please agree that I'm allowed to make a little bit of money because I'm going to fix it up a lot. I'm going to put $200,000 in rehab in this after you leave. So can I make a little bit of profit on this? It's what I do for a living. And if they don't say yes, then you leave and go away. And so you show them the actual numbers that are there. And iBuyers are not following that one bit at all. Completely. I mean, the one article it says is they bought a house for $703,000 and immediately listed it for $753,000. That doesn't meet Mayo. I mean, commission alone knocks that right back down to what they paid for it. So it was a crazy thing they do. They're not following Mayo. I mean, these guys are literally unbelievable. The decisions they make. You know, to give an example of a house about a year ago, maybe a year and a half ago now. I bought a house for $90,000. And I put 100 in it. Okay. So I had $190,000 in it. I sold it for $320,000. So I made a gross profit of $130,000 following our create your own business, create your own economics, right? It met my numbers. It worked. The homeowner was very happy for their situation. I brought this house into a livable condition for a new person to come in. They bought the home. They got a loan from a bank for $320,000. And it was probably, top-notch dollar. I don't think I left, any money on the table because people, like I said, 7 days or less, that list price or higher on my houses. So it was probably fairly priced because people bid on it. My point to the story is you go to public records on that house and you look at it 6 months later, iBuyers, an LLC of them, bought that house for $380,000 from the people I sold it to. So they bought it from me, fixed up, granite, new roof, new vinyl. There was nothing left to do in the house. For $320,000, the iBuyer type companies 6 months later bought it from them, and I have no idea why. Bought it from them for $380,000 6 months later, I don't know why. They're not following, make your own economy principles, okay, with it. So they're just idiots. Those types of companies. Can I say that on the air? They're idiots.
It's true. Go ahead, say it.
Okay, they're idiots. Okay, I mean, they're not following formulas at all.
We're seeing the proof right now.
Yes, exactly.
Yeah.
So I agree with what Katie's saying. Let's take advantage of it where we need. So for me, it was being on that ground floor of providing that house that was ready to go for them. If they thought they could rent it out, like Katie said, you look at all aspects. What if something goes wrong? What if I can't sell it and I have to rent it? Okay. Or if I can't rent it, can I sell it? You have to look at multiple exit strategies, and you need to have at least, 2 or 3 that would work for you. And iBuyers, isn't doing that at all.
Hey, why don't we take a break for our next sponsor? So, one of the best ways to increase your company's brand awareness and increase warm leads is to create written content online. But as we know, content creation can sometimes be a slog. Content creation can be very time consuming and not very cost effective when having to pay professional copywriting fees. It's time to stop spending countless hours writing and paying exorbitant copywriting fees. It's time to use REI Content Packs. REI Content Packs, done for you content packs, give you the tools, flexibility, and cost-effective way to increase your brand's visibility and online presence without spending hours or even days stressing on what to create. REI Content Packs are a collection of high-quality, ready-made real estate blog articles exclusively created for the real estate investing industry. Can you imagine the possibilities? If you could do 2 or 3 more deals per month without increasing your ad spend, REI Content Packs can help you do that. Can you imagine getting unlimited online traffic, increasing your Google ranking, getting more leads, and making more money? REI Content Packs can help you do that too. To get started increasing your brand's content and lessening your workload, head on over to reicontentpacks.com. That's reicontentpacks.com and tell them you heard it from This Month in Real Estate Investing. It's time to get off the online marketing hamster wheel. Try REI Content Packs today at reicontentpacks.com. All right. How am I doing, guys?
Awesome.
Nailed it.
So good.
Excellent.
Such a pro. We never would have known it was your first show. You just
Rocking it.
act like you own the place.
Yeah, right. This is fun. All right, let's get into the next news item. I love this title. New Yorkers are stupid for moving to Texas, Florida. Wall Street's Dr. Doom says. This is in the New York Post. So they're basically saying that, Florida is getting flooded. Texas is going to be too hot. And let's see. So this is coming from the senior economist who earned the nickname Dr. Doom after correctly predicting the 2008 financial crisis and has ridiculed transplanted New Yorkers for stupidly relocating to Sunbelt states during the pandemic. He's saying it's wiser to relocate to the Midwest. Thoughts?
Well, I mean, we're Floridians, as we mentioned before, and I would love if New Yorkers decided that they wanted to go back to New York or go, to the Midwest. Some of their ideals are not, what Floridians are necessarily looking for. Of course, we welcome everyone, but yeah, I think people, again, in panicked situations, like recessions are caused by panic. Like, depending on your thoughts on crypto and and the stock market, all of those things, like it's panicked people. Well, of course, it's very wealthy people that are kind of tipping the scales the way that they want it to go, honestly, in my opinion. But it's a panic situation. And so it's like New Yorkers, like there are many that have flocked to Florida in our neighborhood. There's also Californians that have come to Florida and they've purchased homes in our neighborhood, sight unseen, well over ask. And I mean, I'm talking like the homes that are right there in our neighborhood are selling for $300-400 a square foot, and like they don't even blink at it because of course the cost of living in California is so high. So it's like they want to get out of the boiling pot, and so they're like just jumping and they don't really care where they land. And so I mean, I'm a big fan of just really using common sense. I believe that God gave us a brain, a very high functioning brain for a reason. There's things like computers are incredible, but I don't think computers will ever really be able to do what the human mind does because it was created by an infinitely awesome God. And so, I think it's kind of a snap decision. You know, they don't want to be in lockdown, or they don't want this or that was happening in New York. And so they're just going somewhere else. But it's like, let's actually get to the root of the problem instead of just trying to jump from one boiling pot into something else that's just an unknown, and allowing fear and panic to rule the way that you live your life is never going to bring about a good result. And I think, with like the market kind of tanking in like New York City, we have friends who have a beautiful condo in Trump Tower, and they were actually trying to sell it at a loss because they were just excited to get out of it. They're incredible real estate investors, major private money lenders, very wealthy mentally in every single way. And, at that point they were like, we just want to sell it at a loss. Just the issues with Trump being president and just being in Trump Towers and like vandalism and different things like that. But they've actually held on to their investment. And I think that was a really wise move. Like, rather than just jumping ship, see how you can create a new strategy to be able to kind of be on the rolling wave instead of allowing yourself to be pinned under the wave and have the tumultuous roll of the wave crush you by the coral. I think people just need to think for themselves, and they need to stop allowing the fear mongering and also stop the herd mentality. Like, when I see people running this way, like, we very much live lives that are counter to a lot of people that we grew up with, family members, all of that. And they're actually starting to really take note. And it's like, oh, like, I noticed the Hugheses are always doing it this way, and I've always done it this way. Maybe I should take another look.
Yeah, and the question there is, Sarasota showing unlivable coastline damage?
Not at all.
No, and we've actually talked to local people, because this kind of ties into the whole weather, Florida, flooding, storms, everything. People who've lived there for 60 years, and we've talked to them about how the coastline has changed. And even Katie Marie's family, they've grown up on Lake Michigan, and it's been cyclical historically, where yes, over a decade, it might be however much in or out, but over time, it's not been measurably different beyond, of course, those cycles. Like her parents, even when they were children, they talked about like where the coastline was versus now. And there's not been anything that we've ever seen or heard, especially where we're at. It's unique because there's a, any of you all have been there or seen it. It's really unique because there's how many islands, keys
13,
right there? 13 islands, barrier key.
Within like 5 miles, I think.
Islands right there in the Sarasota area, right there on the coast and right off the coast there. So even with those, it hasn't been, because I always wondered that too. I'm like, man, these houses are right on the water. Like, if the ocean level changed much at all, like these houses, this land wouldn't exist, and they're investing millions and millions of dollars. But it's always been there for as long as we can see back. And so there hasn't been any change or damage on the coastlines that we're aware of.
Yeah, it's more beautiful than ever. We were just out there before we took off on our trip.
Go for it, Tim.
Yeah, so anytime I'm reading an article by a dude nicknamed Dr. Doom, I'm going to question the source, right? I mean, so look, I mean, I'm not a scientist. I'm not going to tell you whether or not Texas is going to be too hot in 20 years or if the Florida coastline is going to be gone. But what I could tell you is right now, Florida and Texas are two of the hottest markets in the country, and I don't know anybody running away from those two markets. Now, would it be a good idea to diversify? Probably not a terrible idea to have some investments in the Midwest, but I mean, I see no reason to be afraid of purchasing in Florida or Texas or really anywhere for that matter, just based on what this guy's saying, especially because of a nickname. I mean, it just, for me, that immediately throws up like 10 red flags. Yeah, I mean, I don't know what's going to happen. I think having a diverse portfolio is a wise decision because, this may actually happen, but I don't see anybody running away, so I'm not going to run away.
David Randolph.
Yeah, I mean, I think you hit it, Tim, nail on the head. I mean, Dr. Doom, what kind of name is that? I mean, you go back to the Bible, the name is very important. And so I don't know why you would pick or or get a name of Dr. Doom, because that it means you're just having to predict or make it up every time you say anything, right? So has he ever said anything good about anything? And so you have to look at what is that, what's his background, what's his knowledge, and stuff. And so to say that Florida will be underwater is a bigger catastrophic issue than deciding whether you should diversify into gold or stocks or anything. We have a bigger problem if Florida's underwater and if Texas is too hot to survive in. Okay, I think it just runs your electric bill up. And like, for example, in my opinion, Arizona's always been too hot anyway. People live in Arizona all the time, and I thought it was too hot to survive there as it was. But it's I guess I shouldn't complain too much since I'm in the Midwest and I got some houses I can sell him in St. Louis. So come to St. Louis, Mr. Dr. Doom. I'll provide housing for you there with it. So yeah, I think it's kind of as Katie says, that sensationalism, in the big mainstream news areas, basically.
And if I can just add one more thing, David, like you just mentioned, it's just hilarious to me, because if we again use common sense and Florida is underwater, what do you think the rest of the country or the world is looking like? I don't think that you're going to be like, oh man, shucks, I wish I wouldn't have moved to Florida. Like, hello, people, if the tide rises, then the continents, like I don't think you're going to be worried about your investments in Florida or Texas, being too hot. Again, yeah, we have a way bigger issue on our hands if that ends up happening. And like, living in fear, as David mentioned, is constricting. It doesn't allow for expansion, and healthy things grow. So it's like if we're going to live in a state of fear, we're never going to get out of our comfort zones, and there's no growth in the comfort zones. There's no comfort in the growth zone. And so we have to take those calculated risks. I mean, why did any of us get out of bed? Have you guys looked at the statistics? 100% of humans are going to die, people. Like, why are we doing anything? We should be, cuddled up in our mama's arms and sucking on a bottle so that we can be comforted. We really have to take risks. That's the beauty of life. And that's what faith is, like the evidence of things that are not yet seen. And so living out of fear is just, it's never going to do us any good. And if Florida's underwater, I mean, hey.
A lot of other places are underwater. Yeah. Florida's underwater.
Oh, and if I could just add one more thing. So we live 2 miles from the water. And with everything going on with Hurricane Ian, and they'll talk about storm surge, which is basically kind of similar to like a little, like a small tsunami kind of a thing, where like the hurricane is twisting and it pulls up water with it, and then basically just like huge waves of water that can be 8, 10, you'll hear like 15-foot storm surge, 20-foot storm surge, that kind of thing. So we were actually talking with a neighbor when we had gotten back down into town, and our area, number one, our house is actually built up a little bit on a hill, and you wouldn't even really notice it if you're just passing by, but actually looking at it, you'll see that our home is higher than the majority of homes in our neighborhood. And our neighbor had really dove into it. We have different flood zones, and we're in D, which is the least likely to ever flood. And our neighbor actually shared with us that there would have to be, I think, between a 25 and 30-foot storm surge, which would mean 30 feet of water would have to flood in order for our home to be underwater. And so, you think about Florida and it's like, oh my goodness, it's so scary. I can't imagine if it was 8-foot storm surge. Well, I live at sea level, like that would absolutely flood my home. But when you dive in and you do the research and understand, like we're actually way higher than sea level. And so we live 2 miles from the water, yet our home, like, unless there's just a crazy natural disaster, is not going to be taken out by a flood. We'll say that.
Gotcha. Let's jump to our next news item, unless you guys had something else to add. Oh, all right. So this will be our last news item, and we'll wrap up. So home flipping is down. and those that remain are looking for cash investors. Source was Benzinga. This is the demise of a formerly hot home market torn apart by increasing mortgage interest rates is now beginning to affect a once thriving home flipping environment. They've got some data from Adam, dives into that. They also say anybody that's flipping right now needs to be looking closely at the pricing of the property, price it to sell. Today is not the time to get greedy. This is from Capital Fund One President Noah Brocious. They're a hard money lender. So I know my personal experience here in the Denver market, we've got some pretty experienced flippers that overestimated what they thought the market was going to be. And now they're sitting on some homes and trying to get out of these hard money loans. So what are you guys seeing and how are you adapting?
Well, I think the biggest word, the most powerful word that you just mentioned is adapting. So I don't think that it's smart to be married to any one hard and fast, I'm only going to flip homes and, that is going to be the way that I'm going to go. You really have to look at the market. You have to look at what people are wanting, because there's a lot of different factors. There's a lot of different dynamics, as you mentioned, mortgage rates, all these different things. People aren't purchasing homes. And so you're flipping a home and you're sitting on it and you've got all of those real hard costs that are just like coming out of the piggy bank every single month. And so I just absolutely believe that adapters, innovators, people who are willing to maybe take a different approach, even for a temporary season, those are the ones that are actually going to be rising to the top, and they're going to be the ones who survive. And so, if somebody has like a super hot flipping business, actually one of our panelists is incredible. She went from absolutely nothing, invested tens of thousands of dollars into mentorship, money she didn't have, and now she's doing 7 figures plus. And
a year in profit and flipping,
has an
automated.
Incredible team, all of that. But so we actually went into her, she has coaching as well on her own. We came in and she interviewed us and we just shared some nuggets with her. And she just said, wow, you guys are like really making me think differently. And her students as well were making comments and asking questions. And so I think it's great to have like a backpack of a bag of tools, right? Because you just don't know what's coming next. And so if you're just hard and fast flipping and you're running out of cash because you're sitting on properties, how can you just innovate? How can you maybe just put those, become a landlord or don't even worry about the whole landlord game and do property management and get a really good property management in place so that you don't have to focus on that. And you can still potentially do your flips. But again, it has to be the right margins. It has to make sense even in a recession. And so I think like people just need to get smart, like the human brain, we're so good at adapting. We analyze things and we know danger's coming over here, it seems like, and so we should run from the bear because the bear's over here. So why would it be any different with a constantly changing market?
David Randolph, did you see in the chat?
Yeah. Have I experienced any issues over the last few months related to this article as a flipper? People ask me all the time, what do you think of this economy? What do you think of the real estate market and this and that and stuff? And I told my story in the beginning, all my renovated houses have sold in 7 days or less at list price or higher for 12 years. So my answer to that question of what the economy is doing is, hey, don't ask me what the economy is doing. Just tell me when there's less than one buyer, because I just need one buyer for my house. It's ready to go. It's beautiful. It's renovated. Nothing, everything's new. I just need one buyer. Okay. So for me, I've always focused on that, making the house the best possible you can. The only thing I would probably offer as advice is you make your money when you buy the house. Okay. So how are you buying your houses? That's what can change for you over time. Let's take the example of those real estate investors who are buying on the courthouse steps, the foreclosures, right? Okay. Well, they were out of business for 18 months due to the CARES Act and the forbearance on the loans. And so, those people would have to switch. So you have to have a method of buying houses that meets the economy where you're at, so that you're buying and making money at the moment you bought the house. Your exit strategy should be you can always sell the house. I mean, this economy, unless Florida gets completely underwater, right? There's always going to be somebody buying a house. Okay. So therefore, as an entrepreneur, you're targeting what are they looking for, what do they need, and selling it at a fair price. All of my houses was sold above list, from the perspective that it was listed at a fair price. So I never projected the ARV, the after repair value. I never projected that the ARV would be something different. I projected what it was at right now in the market, and then get that house done and on the market as fast as possible, so that the comps you use, the sold comps you used, were still valid. Okay. So hopefully things don't go so far down the tubes in 3 months, that your ARV's no good. So it's I think, a question of knowing how you're buying your houses. And so for me, as I said earlier, I do short sales, and that's a great method right now because there are 1.2 million delinquent homeowners. We talk about this tsunami of foreclosures. I don't think, and I don't want a tsunami of foreclosures to come, because I don't want the bank to foreclose on everybody and now they own the house. Okay. I would rather it be a slow moving river. And so I can step in through the short sale, and the banks are dumping the houses right now. Okay. Because they have other reasons for selling. Okay. They're not rehabbers. They don't want to own any houses. They've got non-performing loans. They've got balance sheets, and you can take advantage of that in today's market because of 1.2 million delinquent homeowners. Now add on top of it, with the inflation and the cost of food and gas, there are more people now missing their house payment, adding to this 1.2 million delinquent loans. So it's a question of picking the right method to buy your house. And then it's not going to matter what this article is talking about, as long as you have one buyer for your house at a fair price.
Yep. Yeah. Tim, did you have something to add?
Sure. I mean, there's not a ton to add because, what David just said was pretty much hammer hitting nail, right? So, yeah, if I'm buying a flip right now, I might be a little bit more bearish on my ARV, but as David said, I'm going to make sure that I'm purchasing it with equity, right? So, I'm going to have some cost basis. I'm going to have some savings built in just in case everything goes wrong. So, really, if you have a great team, if you know how quick they could get in and how quick they could get out, you could still base numbers off of these current market values, and you might end up selling for a little bit less right now. Obviously, I'm in Chicago. We have winter market. It goes down every year anyways. So now is not an ideal time for flipping in my market, but that doesn't mean that it's like that everywhere. So, I'm super bearish with flipping right now. I'm looking at other strategies because I feel like, especially like seller financing with a wrap, there is no shortage of people right now that have bad credit and high income. So, these people are so easy to find. Like, that's just a better strategy for me right now. I feel a lot safer with that. But like David said, if you're buying the property correctly, you could still flip in this market. But I know people that are projecting the ARVs right now, they're looking at 3 years back. So, some of the people on the show that we've interviewed, they're super bearish on what it looks like right now. But as long as you have a quick turnaround time, you could still get it done right now. But it's no surprise to me that there's less flippers right now because, that's what the market is showing. The market's in a decline. So you should be more cautious.
Yeah. Speed is very important in flipping. Guys, this was freaking awesome. I'm super glad you came on and gave us your perspective, and I hope it was valuable for all the viewers. We're going to do outros, so just kind of give a little wrap up each one of you with some contact info, and then we'll get to our sponsors and call it a day. David and Katie, you want to start it off?
Yeah, thank you so much again,
Yes.
Antonio and James, for having us on your show here, and it's just great what you guys are doing, educating people. And so we're thankful to be here. So yeah, contact, you can go, we have a free community with valuable trainings, live sessions, a bunch of cool things. If you go to www.kingdomwealththroughrealestate.com, as well as our main site is www.simplifiedinvesting.com. And so, yeah, connect with us. We'd love to connect with you, help in any way we can. We have a live event coming up in Sarasota, Florida in February. So if you're watching this now or on replay, we'd love to have you. So check that link out. There's amazing speakers and attendees for you to connect with, learn from, collaborate with, fund your deals, all of that. So you're all invited to that. Check it out. The link to that, the live event site is simplifiedinvesting.com/SI live, like Sally Ice Cream Live. So we'd love to see you, meet you, and amazing people you can connect with there and learn from.
Fantastic. And by the way, stay on after the show. We'll have a little wrap up. David Randolph.
Yeah. Hey, this was a lot of fun. Okay. I really enjoyed this. Antonio, thank you very much for putting this together. James, it's very nice to meet you for the first time. You did excellent for your first show. There's no cue cards for you. You're kind of going along and doing a great job. And I really enjoy the other guests. It's amazing. And this is a tribute to Antonio. Okay. He knows people. And I love these other two guests. We've had some very good conversations and very good viewpoints with it and stuff. And so this was a lot of fun for me. So I thank you for inviting me on here. And so for people out there, if you want to contact me, I have a website, thedavidrandolph.com. And stuff. And so you can go there and find out what I do and how I can help you. But my heart is to help, you be successful like I've been in real estate. I've got a lot of money in my retirement accounts and I made a lot more money that wasn't there. That's just money my wife didn't spend. So real estate is a way for you to have financial freedom. And I want to help people do that. And my ways are I can teach you how to do short sales and I can help lend money to you. No credit score. There's a lot more to it. So probably the easiest thing is if you text the word short to my phone number, 636-685-2990. I'll send you a video and slides on short sales about how I do them. Or you text the word lend, L-E-N-D, to my phone number. Now, don't do it at the moment because I'm speaking, right? But, after this, or I guess if it's recorded, you can text it to me right away. But text lend to 636-685-2990, and I'll send you my 4-page lending document. There's a lot that comes with that, my SKU numbers, my material suppliers and stuff. So I want you to be successful in that. I lend all across the United States with it. And so that's probably the easiest way. Just go to the website, thedavidrandolph.com. Thank you very much.
Awesome. Tim Winfrey Jr.
All right. So if you're looking to buy or sell in the Chicago area, you could just Google First Class Real Estate Great Lakes, and that'll go right to my assistant, and we'll take care of you. In ways to find me online, I would just Google the Freedom Chasers podcast. That is a passion project of mine. We're not really monetizing that at all at the moment. We are just interviewing awesome real estate investors throughout the country and talking about what they're doing. We do things a little bit differently. We like to talk about the challenges and things of that nature because failure is the way. So, we'd like to highlight that because every single guest that we've spoken with has failed multiple times. I feel like the ones that have failed the most have ended up having the most success. So we like to highlight that a lot. There's also a free Facebook group where we put a lot of content in. That is just the Freedom Chaser Sales and Investing group. You could find that on Facebook. And yeah, we are just here to inspire as many people to live their lives in passion, purpose, and to find financial freedom.
Fantastic. You guys are awesome. Thanks to our sponsors, Jason Palliser's 2-day investment blueprint and REI Content Packs. To subscribe, follow, and stay in touch with This Month in Real Estate Investing, visit thismonthinrealestateinvesting.com or find the show on your favorite podcast app. Thanks for watching and subscribing, and always know that when one door closes, another door opens. Thanks, guys.